A lot of realtors, they might have bought their car a few years ago, maybe when they weren't a realtor, maybe when they weren't making enough money to worry about tax deductions. And then all of a sudden now they are. So it's not like you have to go buy a new vehicle to get the deduction. All you need to do is convert the vehicle you already had to business use. There's a way to do this. It's a lot of people think that, if they bought something a few years ago, they lost that deduction. But if you convert it to business use, you can deduct it in that year also. That's true for like if you convert a personal residence to a rental house, you can do a cost segregation study and take a bunch of deductions when you convert it. There's a lot of things like that where different kinds of equipment you can, once you place it in service for business, that's when you get the deduction. It's not necessarily when you bought it. You have to buy it, but even if you bought it a few years ago, it's when you place it in service as a business use asset that you get the deduction. So that's one area that kind of is this personal, is it business? There's lots of other stuff like cell phones. The IRS wants you to have at least one phone that's personal use, but if you have a landline, then your cell phone is completely deductible as a realtor. There's lots of things in your home that are deductible. So if just the use of your home. So most realtors have a home office and oftentimes work out of their homes. We have, say it's a one office, one room is the office, and say it's a 3-bedroom house, and then there's a common area. So we count that as 3 plus common areas, 4 areas. And so one of those is the office. So we would take 25% of their mortgage interest, 25% of their real estate taxes, 25% of the maintenance. We take 100% of anything they do just for the home office. But if they do something general for the house, cleaners is a big one. Cleaners are deductible, multiplied by this business use percentage that's based on number of rooms. A lot of times people might have been used to the old home office rules where you get barely any deduction, just a few $100 or just like a couple percent of your house. But under the accountable reimbursable plan, we're talking about all those same costs, but you can get a much higher allocation. So, so there's a way to allocate what would be personal expenses. You paid for them personally, but you can allocate the part that's business and have your S corporation reimburse you. That's a very common one for realtors.
Yeah, so that sounds like a lot. And you need a lot of knowledge, and I'm sure there's many changes in the rules. Would you say this is why people usually don't know about how to do it, when to do it, and what's important, what they are even
Well, these in the area of what's personal expense and what's a deductible business expense, there's some specific rules. The first thing you have to look at, not to get too technical, but no, just layperson would know this. Under Section 162 of the code, it lays out what is deductible for business, and then pretty much nothing is deductible for personal unless it's specifically got a code section that deducts it. So everything's for business is deductible unless it's specifically excluded. So that's kind of how it works. So you look at what's ordinary, what the standard is. Is it an ordinary necessary business expense? And then if it is, it's deductible. Doesn't mean you might not have spent the same money on that same thing even when you didn't have your business, but if it's ordinary necessary business expense for your business, then it's deductible. And then we look at, there's these special reimbursement rules about how to, when you spent money personally, how to allocate some of that and reimburse yourself, have the company reimburse you so you get that deduction on the books of the business.